Hello and welcome to our comprehensive guide to stock trading for beginners. In this video, we'll cover everything you need to know to start navigating the stock market with confidence. Before we dive in, let's define what we mean by stock trading. Simply put, stock trading involves buying and selling shares of publicly traded companies. When you buy a share of a company's stock, you become a part owner of that company and are entitled to a portion of its profits. Now, if you're new to stock trading, it can be overwhelming to navigate the complex world of the stock market. But don't worry, we're here to help. Let's get started with the basics. First up, let's talk about the different types of stock. There are two main types: common stock and preferred stock. Common stock is the most common type of stock and represents ownership in a company. Preferred stock, on the other hand, represents a higher level of ownership but typically doesn't offer the same level of voting rights as common stock. If you're ready to embark on your stock trading journey, the first step is to open a brokerage account with an online stock brokerage. This is your ticket to the stock market, so it's important to choose the right one for you. Now, don't rush into this decision. Take your time researching different options and evaluating their reputation, fees, and user reviews. You want to feel confident that you're choosing the best online stock broker for your unique situation. As you research, pay attention to trading commission fees. Some brokers offer free trading, the ease of use of their app or website, and whether they provide any research or learning tools for users. After all, you want to make sure you can navigate the platform like a pro and have the resources you need to make informed trades. Big firms like Fidelity, Vanguard, and Charles Schwab have been around for years and offer both online and app-based trading tools. They have a strong reputation, low fees, and are well known in the industry. But don't discount the newer players in the game. There are now platforms that specialize in small trades and offer user-friendly apps such as Robinhood, Webull, and Sophie. Your ideal brokerage size and style will depend on your personal preferences and trading goals. So take your time and do your research to find the right online stock brokerage for you. With the right broker by your side, you'll be ready to navigate the stock market and make smart investments. So now that you have your online brokerage account set up, it's time to start buying stocks, right? Well, not so fast. Choosing the right stocks can feel like a daunting task, especially if you're new to trading. If you're feeling a bit overwhelmed, don't worry, there's an alternative to individual stocks that may be a better fit for you: exchange-traded funds, or ETFs for short. ETFs are like a grab bag of stocks, allowing you to buy a bundle of companies all at once. This can be a great option if you're not feeling confident about choosing one company over another. For beginners, we recommend starting with ETFs that replicate major stock markets indices like the Dow, Nasdaq, and S&P 500. These funds provide broad exposure to the US stock market and are a great place to start building your portfolio. But remember, diversification is key. Many successful traders also invest in other assets, such as bonds, to balance out their portfolios and create less risk during stock market downturns. So take your time and do your research when it comes to choosing your investments. ETFs can be a great starting point for new traders, but ultimately, your investment decisions will depend on your individual financial goals and risk tolerance. Now that you have a better understanding of ETFs, it's time to talk about the different types of trade orders you can place when buying or selling a traded asset, like an ETF or stock. The two most basic types of trade orders are market orders and limit orders. Market orders are executed immediately, meaning the asset you're trading goes for the best price available at that moment. This can be a good option if you're looking to buy or sell quickly. However, if you're looking for more control over the price you pay or receive, then you may want to consider a limit order. With a limit order, you set a specific price at which you are willing to buy or sell the asset. The order won't necessarily execute right away, but it gives you greater control over the trade and the potential to get the most profit possible. But what if you already own a stock and want to protect your profits? Consider placing a trailing stop-loss sell order. This type of order allows you to retain the stock as long as the price is going up, but will automatically sell if the price drops past a certain point. It's a great way to protect your profits and minimize your losses. Remember, when it comes to trade orders, it's important to choose the right type of order for your specific situation. Market orders can be quick and easy, but limit orders and trailing stop-loss sell orders offer more control and protection. Ultimately, it's up to you to decide which order type is right for your trading strategy. Now that you have a better understanding of how to choose the right trade order, it's time to learn how to actually place a trade. Once you have funded your brokerage account by transferring money from your bank account, you'll need to wait for the funds to settle, which can take a certain number of days. After the funds have settled, log into your online brokerage account and select the stock or ETF you want to trade. From there, you'll need to choose your order type, whether that be a market order or a limit order, and place the order. If you're using market orders, the trade should execute immediately, but if you're using a limit order, it might take some time for the order to execute, depending on market conditions. If you're using a limit order and you want the trade to happen more quickly, you can adjust the limit price to be closer to the asking price if you're buying or the bid price if you're selling. Keep in mind that adjusting the price too much could result in the order executing at a higher price than you intended to pay or at a lower price than you intended to sell for. After placing the trade, it's important to keep an eye on it to make sure it executes as expected. If you run into any issues or have questions, don't hesitate to reach out to your brokerage's customer support team. With a little patience and practice, you'll be placing trades like a pro in no time. Finally, let's talk about some tips for success in stock trading. One of the most important things you can do is to stay disciplined and avoid emotional decision-making. It's also important to have a solid investment strategy in place and to diversify your portfolio to minimize risk. And of course, it never hurts to seek out the advice of experienced investors or financial advisors. And there you have it, our comprehensive guide to stock trading for beginners. Remember, stock trading can be a great way to grow your wealth, but it's important to approach it with caution and a willingness to learn. With practice and persistence, you'll be well on your way to navigating the stock market like a pro. Thanks for watching.